Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about USDCAD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of the market, so performing a complete multi-time frame top-down analysis. Then we will be moving to the order flow, so essentially looking at what hedge funds and the big players in the market are doing, so how institutions are moving their positioning. And by the end of the video, we will be putting together these two different types of analysis to try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing a quite strong historical structure level for this market. This area, in fact, was acting as previous support here, preceding all these rejections to the upside. And what we can see is that as the market is approaching this area once again, there is a possibility to see more longing happening inside of this area, which at that point would further increase the probabilities of a potential push higher away from this zone. So the monthly time frame, at least at the moment, looks quite bullish, with the possibility of yet another rejection away from this area. Dropping down on the weekly time frame, what do we see? Now, from a weekly perspective, it is quite clear how we had a move to the upside. Currently, we're getting a correction. However, in this move to the upside, there is one level which definitely stands out, which is exactly this zone here. In fact, this level was acting first as support, starting from here, preceding all this rejection to the upside, again as support here, then acted as resistance with the creation of this red candle, and now the market has broken it to the upside and is retesting it as support. So as the market is testing this support, there is a possibility to see a potential rejection to the upside, even only a short-term rejection to the upside, but at least a reaction to this previous weekly resistance turn support. That definitely seems quite possible. Dropping down on the daily time frame, what do we see? Now, from a daily perspective, the situation is quite clear. We have a market which, in creating this move to the downside, has just created this overextended M pattern. And in general, after the creation of an overextended M pattern, what you would expect is for the market to create a rejection to the upside. Precisely, you would like to see the market create a rejection to the upside, at least to the 0.32 of the Fibonacci taken on the impulse leg. Now, in this case, the impulse leg is from this high to this low. Therefore, what seems possible is that this market could provide this correction to the 0.382 of the Fibonacci taken on this daily impulse leg, which at the moment is lining up exactly at this area. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing, and we check the data precisely for the CAD, the first thing that we have to keep in mind is that with the last report on the CAD, net positions once again started decreasing. We went from having minus 863 to minus 1.3k net positions, so institutions once again are starting to decrease their net positions, therefore moving back to the bearish side for the CAD. And keep in mind that all currencies on the spot are traded against the USD. So in order for institutions to be shorting the CAD, they are essentially longing USD CAD, therefore making it stronger, because a decreasing strength of the CAD makes USD CAD stronger. So in this case, there is definitely the possibility for this potential push higher and for this short-term correction to the 0.32 of the Fibonacci taken on this daily impulse leg, which at that point would complete this overextended M pattern here from a daily standpoint. Therefore, in a situation like this, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, I wouldn't be surprised that if this market would shift from an intraday bearish to a bullish market, I definitely would not be surprised to see a potential push higher, completing this overextended M pattern at this 0.32 of the Fibonacci taken on the daily impulse leg. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and on the main page of my YouTube channel. Here, you have the possibility to gain access to the most complete all-inclusive mentorship program that I have created for you. As soon as you open the website, you will see this video breaking down everything included in the mentorship program. And in the program, you have the possibility to gain access to all my courses and also to the software, so the COT data software, which is exactly the one that we used in this analysis, the trading station software with Telegram signals integration, which puts together everything that you need as a trader all in one interface. You also have the possibility to gain access to one-on-one private mentoring directly with me, so you will have my personal contact. And if you continue to scroll down on the website, you will see that directly from the website, you will have the possibility to register and gain automatically access with the email and password that you will create during the registration process. So at least I suggest that you go and check it out right now. The link is both in description and in the main page of my YouTube channel, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.